Have you ever dreamed of owning your own home? Or perhaps you've considered investing in real estate but weren't sure where to start? What if we told you that in 2024, your home dreams could become a reality? In today's video, we're talking about the world of real estate. Make sure you watch till the end as we explore the current market trends and share a comprehensive guide for all first-time homebuyers and investors out there. We'll also give you some professional tips that will help you avoid the common mistakes people often make. Whether you're looking to buy your first home or considering investing in a property, this video has it all for you. And before we get started, if you're new here, make sure you subscribe and hit that bell icon so you don't miss out on our next videos. Understanding real estate in 2024. The year 2024 has brought some interesting changes to the real estate market. As we navigate through this year, it's really crucial to understand these shifts and how they could impact your home buying or investment decisions. Technology is playing a bigger role in the real estate market. From virtual home tours to digital transactions, technology is making the home buying process more convenient and efficient. It's become so important to stay updated with these trends because they can give you an edge in the real estate market, which is influenced by various factors, including economic conditions, government policies, and consumer behavior. The real estate market has been highly competitive over the last 5 years as a real estate inventory has dropped, and there has been an increase in competition for both traditional home sales and investment opportunities. By understanding the current market trends, you can make informed decisions and seize potential opportunities. Moving on, we know buying a home for the first-time home buyer can be both exciting and daunting. That's why we're here to guide you through the process, step by step. First things first, let's talk about budgeting. You need to understand how much you can afford before you start house hunting. Consider your income, savings, current debt, and monthly expenses. Buying a home involves more than just the mortgage payment. You'll also need to account for property taxes, insurance, and maintenance costs. It's also very important to get pre-approved for a home loan before you start looking for a home. If you don't know what this is the approval through a bank or lender that gives you a clear idea of how much you can borrow to purchase a home, and also shows sellers that you're a serious buyer. There are different types of mortgages available, each with its own pros and cons. Take the time to research and understand these options, and also educate yourself by speaking to your home loan specialist. They will be able to help navigate you through your options. There are some common mistakes that first-time home buyers make. One of the biggest ones is skipping the home inspection. A home inspection can reveal potential issues with the property that might not be visible during a home tour. In many cases, after you have a home inspection performed, you can negotiate with the homeowner to have repairs made to the property before you take possession after a successful close of escrow. Another common mistake is not considering the resale value. Even if you plan to live in the house for a long time, it's always a good idea to consider its potential resale value. A lot of first-time home buyers are so excited to just purchase the home that they don't consider how the list price of the home compares to other comparable sales in the neighborhood or direct area. Having a skilled real estate agent can help you avoid making a bad financial mistake with overpaying for a property. Next, did you know that there are often hidden costs associated with buying a home? These can include closing costs, appraisal fees, and moving expenses. It's important to budget for these costs so you're not caught off guard. Feeling more confident about buying your first home? We hope so. But what if you're interested in investing in real estate? Don't go anywhere as we explore real estate investments. Investing in real estate can be an exciting venture, offering potential returns that can significantly boost your financial portfolio. Get your basics down and understand what real estate investment entails. You know, it's not just about buying a property and waiting for its value to increase. It's about strategically choosing properties that can generate a steady stream of income or appreciate over time. There are 4 common ways you can invest in real estate. Each of them have risk and reward involved, and we suggest you do your homework before jumping into any of them to make sure your financial investment is protected as well as it can be. Number 1, residential properties. This involves investing in homes, apartments, townhouses, or any property designed to house individuals or families. The income usually comes from rental payments. Number 2, commercial properties. These are properties used for business purposes, like office buildings, warehouses, or retail stores. Remember, they often yield higher returns than residential properties, but can also be riskier and might take longer to find a solid tenant to occupy the building. Number 3, real estate investment trusts. If you're not keen on owning physical properties, REITs can be a great option, or possibly a better option. They're companies that own, operate, or finance income-generating real estate. You can invest in REITs much like you would in stocks, making them a more accessible way to invest in real estate. Number 4, real estate crowdfunding. This is a relatively new way to invest in real estate. It involves pooling money with other investors to buy a property. It's a great way to get started in real estate investing without needing a lot of capital. If you're already in real estate, you've probably heard the phrase location, and it's actually true. Location does play a key role and can significantly impact the value of a property. A good location can offer several benefits, like providing access to amenities like schools, hospitals, and shopping centers, or it can offer a safe and secure environment. It can also provide potential for growth and development, which can increase the property's value over time. If you don't know how to evaluate a location, start with researching the area. Look at the local amenities, crime rates, school districts, and future development plans. These factors can give you a good idea of what it's like to live in the area and how it might change in the future. Visiting at different times is also not a bad idea. A neighborhood can feel different at various times of the day. So, try to visit in the morning, afternoon, and evening to get a complete picture. You can also try to talk to locals. You know, they're living there, and who knows better about the area than a local? They can provide valuable insights that you might not find online. Ask about the pros and cons of living in the area. Now let's talk about property evaluation. This involves assessing the condition and value of the property. This is a crucial step in the home shopping process, as you want to make sure you are paying the correct amount for the property and the conditions it's currently in. You should also consider hiring a professional real estate agent or lawyer. They can guide you through the process, negotiate on your behalf, and help you avoid potential pitfalls. As a first-time homebuyer or investor, you will probably need the support of a seasoned real estate agent or lawyer so you can make the best financial decision with your property investment. Speaking of negotiating, don't be afraid to negotiate the price. Most sellers are willing to negotiate, especially if their property has been on the market for a while. Another negotiable item of a property sale is the closing cost. Sellers might be inclined to pay some of your closing costs if the offer is satisfactory to them. Another thing to consider is the age of the property. Older properties might have more character, but they might also require more maintenance. A good home inspector will be able to identify current and future issues. Now, let's move on to some insider tips and tricks that can give you an edge in the real estate market. Tip number 1. Before you start looking for a property, make a list of your needs and wants. This will help you stay focused during your search and avoid getting sidetracked by properties that don't meet your criteria. Tip number 2. Getting pre-approved. We've already mentioned this in our video, and it's worth it. Getting pre-approved for a mortgage before you start house hunting can give you a competitive edge. It shows sellers that you're serious and financially capable of buying their property. Tip number 3. Always look at comparable properties. See what similar properties in the area have sold for to get an idea of the property's value. Tip number 4, and probably the most important one. Don't rush. Buying a property is a big decision. So it's okay to take your time, do your research, and not rushing into anything. As we've navigated through the ins and outs of real estate, let's remember that the real estate market doesn't exist in a vacuum. It's deeply intertwined with the broader economy. Economic conditions play a significant role in shaping real estate trends. For instance, when the economy is booming, people have more disposable income. This can lead to increased demand for real estate, driving up property prices. Conversely, in a recession, real estate demand and prices may fall. Interest rates, set by the central bank, are another key economic factor that impacts the real estate market. When interest rates are low, borrowing money becomes cheaper. This can lead to increased demand for mortgages, pushing up property prices. On the other hand, high interest rates can make mortgages more expensive, potentially cooling the real estate market. Inflation can also impact real estate. If inflation is high, the purchasing power of money decreases. In response, people might invest in real estate as a hard asset that can potentially hold its value in the face of rising prices. Don't be afraid to make the plunge, though. While these economic factors can influence the real estate market, they're just one piece of the puzzle. Local factors, such as the desirability of the city, neighborhood, and the condition of the property also play a crucial role. We hope this guide has given you a better understanding of the real estate market in 2024. If you enjoyed the info in this video, we'd love to hear from you. What's one thing you learned from this video that you'll start implementing in your investing journey? If you've any questions or if there's anything else you'd like to know about real estate, feel free to drop your comments below. And if there are topics you'd like us to cover in future videos, let us know that too. Before you go, don't forget to check out our video on assets versus liabilities. What's the difference? Make sure you hit that subscribe button and press the bell icon. Thanks for watching.